We have governments and central banks intervening in a very experimental type way. I would say they just don't know what they're doing. No central banker or politicians has ever done what these guys are doing right now, and there's just no telling what can happen. Everything's a wild card at this point.
Hello everyone, and welcome into crushthestreet.com. We got a special interview with Lior Gantz of WealthResearchGroup.com. He's the founder, he's the president, and Lior is a value investor, you know, who focuses on beating the markets, and he's got, you know, a really strategic way to approach investing. And you know what? He's someone who I consider a mentor in my life because of just the way he approaches investments, and also the balance that he has. He's about to be a father, a great husband, and he's running this, you know, premier financial publication. And I'm looking forward to having this conversation with him in these very, very volatile times. So Lior, thanks for joining me.
Hey, thanks for having me. I'm very excited.
Lior, here at crushthestreet.com, you know, we've been documenting this economic collapse for some time now, and I must point out that it seems like every other day there seems to be some sort of deadly act of violence, whether it's a terrorist attack, protests, just tons of things going on, shootings all over the world. And I want to ask you, is this a simple reaction to a crumbling financial environment? Are people, you know, reacting to the fact that there's just not as much opportunity in the world at the moment?
Well, great question, Kenny. I think, you know, violence is the result of frustration and despair, and it's a very easy outlet for your emotions. I can understand that. I personally just don't have time to get frustrated or you know, desperate. Instead, I spend a lot of time educating myself on how I can best serve others and myself. I guess if your question was how to react to what's going on, I would say the best way is not to act violently. I would say now is a very good time to diversify yourself politically as well as financially, and just realize that in the 21st century, we're all going to live a lot longer, and we're going to experience much more changes in our lives, and we got to embrace rapid change instead of fighting it, and just capitalize on what's going on in the world and not try to change it so much. What's out of our control is out of our control, basically.
Yeah, well, I mean, that's great advice, especially with the current situation we're dealing with, and having a optimistic approach to it. And that's why I like speaking to guys like you who can shed some light on that. Lior, I mean, but these problems that we see now, do you see them escalating here in 2016, 2017, and into 2018, these Brexit-type moments, these coups in Turkey, these protests, and, you know, these economic problems? Do you see these escalating over the next couple years?
I do. Look, the global economy is slowing. One of the best indicators to see that is shipping. It's down both for personal and business use. Loans are contracting in a very rapid fashion. That means people are not building businesses, not moving forward with investments, etc. Commodities, except for the precious metals, who've been very, very good this year, they are very cheap. Corporate profits are down for a number of consecutive quarters, and that's one of the best indicators that a recession is coming. You know, recessions are very natural, Kenny. I wrote about it at the Wealth Research Group site. It's called As Natural as the Thunderstorm, and it's just about the fact that recessions are very timely. They happen. You don't need to get you know, frustrated about it or naive about it. They just happen. What does worry me is that the free markets don't get a chance to grow out of recessions anymore, to learn lessons and improve. Instead, we have governments and central banks intervening in a very experimental type way. I would say they just don't know what they're doing. No central banker or politicians has ever done what these guys are doing right now, and there's just no telling what can happen. It's everything's a wild card at this point, and I guess that's why Ray Dalio, who is the best hedge fund manager in history, has had such a success in the last 2 decades with the all-weather portfolio. That's the best performing mutual fund in history. And what I've done is studied what this billionaire has done, and I've learned his disadvantages as a fund manager who runs, about $80 billion in the all-weather portfolio, and I found ways for the individual to increase those returns because basically he doesn't have the constraints of having so much money and clients to satisfy. So personally, I am running with a portfolio called the Four Seasons portfolio for 2016, and actually for our members of Wealth Research Group, 100% transparency with them. They all have access to this portfolio, and I decided to give this to the Crush the Streets subscribers as well at WealthResearchGroup.com/WealthTransfer. The way this is set up is it's the all-weather portfolio on steroids. So if Ray Dalio can only kick into fifth gear because there's many constraints to hedge funds, this goes all the way to sixth gear. That's about all I can say. But anyone who was ready and thinks that the economy is in a rough shape should take care of himself and be very, very diversified.
Well, thank you for that offer. Of course, we'll have that link in the video. Lior, I would tell you at the beginning of the year, looking at what we saw coming out of China with the news and the stock markets violently reacting, and then with Brexit happening not that long ago, the markets reacting violently then as well, I would not have expected to see U.S. stocks hitting all-time highs in the face of such disastrous fundamentals. And so I'll ask you, does it shock you that U.S. equities are hitting all-time highs here in 2016?
This is a very, very good question, and if you wouldn't have brought it up, I would have brought it up myself. This is a very, very big anomaly. A big anomaly. Some companies are grossly overvalued, but you got to realize that the institutional money, the big funds, the sovereign funds, hedge fund managers, etc., they have few alternatives. What are you going to do? You're gonna put your money in bonds? Most bonds are yielding negative interest rates right now. That means you get to pay somebody and to loan him money. That is insane. Cash, staying cash, and what do you get out of it? It erodes from inflation. And what currency do you trust? Swiss franc, who used to be the world's #1 currency, they've inflated that currency by several 100% in the last 20 years. So it's very volatile. Do you go to real estate? Real estate is back to pre-recession prices due to so many Asians buying cash real estate in the United States. And you got to realize that banks aren't that easy with their lending requirements. So don't expect retail people to come in and buy your properties for double what you paid for, like it was in the days of 2003 to 2008. That's not going to happen. So a lot of funds that have invested big money in real estate from 2008 to 2011 are just not out there buying anymore. So what's left? It's stocks. So that's why stocks are going higher and higher, though the fundamentals are not good at all. But there's a limit to this, and once hedge fund managers see the madness of this, they're going to stop, and they're going to look at the plethora of investments in the world, and they're going to see what's cheap, and they're going to move to the most, the cheapest thing out there, which is by far commodities. And in this kind of environment where anything can happen, they're going to move to gold and silver. But to your question, it doesn't surprise me. When interest rates are low, prices go up. Interest rates act as a weight and there's just nothing to hold prices down. What does surprise me, if you're asking me, anything in the world that does surprise me, it's the price of silver. It's just so ridiculously low that once investors see the opportunity in silver, it can be a matter of days for it to go back to its historical ratio with gold is 16 to 1. Currently, it's about 66 to 1. So it's about 400. It has 400% to go up, only to come back to its mean. I think the reason for this, Kenny, is that gold has become the monetary money of choice for governments, and silver is now more of an industrial metal. But the masses, they cannot afford to buy lots of ounces of gold with gold trading over 1,300. They're going to make silver money again just with using the free markets, and that's what's going to drive silver higher. What's really scary and exciting, Kenny, is that because the price is so low, there's very few mining companies that focus on silver solely, because it doesn't, you can't produce a high profit. Most of the silver mines are byproducts of base metals. So there's going to be a surge in demand, and there's just little supply. Forget about it. It's going to go big.
Yeah, well, we're big on silver here at crushthestreet.com, as well as gold, and I do want to transition, and I know you touched on it, talk about gold a little more here. And one of the things I noticed was gold had some big moves, in Brexit type moments. We saw some big moves after the news come out in China earlier in the year, and then Brexit happened. We were seeing 100-point swings, $100 swings intraday on gold while that type of news was coming out. And I want to get your thoughts here, if you think that gold is going to move like that when these big events happen, if we're going to see gold have those big moves forward in chunks, a shoot towards the 14 and then a shoot towards the 16 and then 2000, based on this, big financial news that's inevitably coming, just like you said, with negative interest rates, debt, and just all the problems that are on the horizon, kind of creating the perfect storm here for precious metals. So just some of your thoughts on that.
Kenny, it's definitely going to be violent. It's definitely going to go higher, and there's definitely going to be $100 to $200 days where gold's going to move up. The precious metals move up due to fear, and throughout time, the fear gauge is mostly low. If you take a look at the 20th century, the fear gauge is mostly low. We went through 2 world wars, famines, flus, terror attacks, energy shocks, political unrest, and still every dollar invested in the S&P 500 in 1971 is worth about $3 million today. The stock market is a very, very exciting wealth machine. But, and this is a big but, once in a while, the system itself needs updating. The dollar standard system is getting destroyed right now. And this is the time to throw the old away and replace it with a new. And this process is horrible for most investors because it's very unpredictable. And what every investor needs at this time is to be very diversified. And I talk about this a lot at Wealth Research Group about asset allocation, intelligent asset allocation, and having the proper crisis hedges. We'll have that link in the bottom of the interview for sure for your subscribers. On top of that, I would say this, Kenny, the only proven indicator of a bull market in history for gold and silver is negative interest rates. This is something that is not flexible. When interest rates are negative, gold and silver go up substantially. And this is what's going on today. There's $12 trillion of negative interest rate bonds. And what you got to realize is this is a race to the bottom. Japan has lowered interest rates to negative levels. Germany has just issued negative interest rate bonds. Canada has done this as well. So the U.S. cannot afford to have positive yielding bonds. This is something that's going to create a race to the bottom. all countries are going to try and move to the negative interest rate level, and this is going to be more and more bullish for gold and silver. In my opinion, whoever is ready and is not afraid should be very glad at what's going on, because he can capitalize on this. After a 5-year bear market in the mining shares, they are incredibly cheap. We just debuted our first profile in Wealth Research Group, by the way, K92 Mining, and it went up 72% in 6 days. It's the highest performing stock in the TSX in the last 6 days. Personally, from April until now, I've done 4 doubles in 4 different stocks, and I'm currently researching 5 more. We've been researching them for months. One of these companies I've been looking at since 2011, and we're just waiting for the perfect entry point. And this is obviously email sensitive alerts that we send to our members, and it's obviously it's part of the Wealth Research Group plethora of service, which is free. By the way, you can just go to WealthResearchGroup.com, sign up for a letter, and you'll be one of the contrarians that get this information on the spot live. Yeah. So to answer your question, Kenny, yeah, I believe the future. That's why I founded Wealth Research Group. I was a long-term investor who finds these deep value compounding companies that serve you well for decades, but the system itself is in danger, and it's very hard to predict what's going to happen in a 30-year time span. This is not the 1970s or 80s where you could see the future and it was bright. This is a very, very tough environment, and precious metals would just do fantastic. And as an owner of mining shares, you basically own the most important metals in this environment. So you're going to get rewarded real good with select companies that have the right management.
Yeah. Well, Lior, that's really good advice and inspiring, actually. I like talking to inspiring people, and it's one of the reasons I really appreciate you. I want to ask you, just in closing thoughts, closing words of advice, what are you recommending to people now in 2016? And of course, give people an idea, and I know you already did this to an extent, but give people an idea of what they can expect to find if they visit you at WealthResearchGroup.com.
Sure. I believe the first thing anybody should do is get out of debt. Close down your debt, consumer debt, business debt, whatever debt you have. This is the worst time to have debts. A deflationary environment is horrible for debt holders, and that's your primary step right now. The second thing you got to do is make sure that you are very, very valuable to your employer, or very, very valuable to your customers as a business owner. Unemployment could go much higher in a deflationary environment, and you got to be standing out. That's the 2 main things anybody should do. Now, if you have savings and you want to invest them, you got to make sure to be very strategic. Lots of assets are going to go down big, and other investments are going to go high big time. This is called a wealth transfer. And at Wealth Research Group, what we do is we build a financial fortress of assets with our subscribers. You can go to wealthresearchgroup.com/financial fortress and see a two-minute video on exactly what Wealth Research Group is all about. But I guess if you want to learn exactly what I'm doing, then if you want to access the 4 seasons portfolio, you go to wealthresearchgroup.com/WealthTransfer, and it's all there. I mean, there's just no other way to do it. You got to be very diversified and very strategic, and you can make a fortune with what's going on right now.
Lior, again, thank you for coming on the show and sharing with us the years of knowledge and research that you've done in the markets and the economy. It's greatly appreciated. Thanks for coming on the show.
Thank you very much. I hope to be here lots of times.